Hi, welcome back. This is SeeWing Yee from the Yee Real Estate Network, and today I'm going to go over three co-living investment strategies. And towards the end, I'm going to share with you what is my personal favorite, something that we are doing. All right, so without further ado, let's dive deeper into this amazing emerging real estate asset class, co-living rent by the room investment model, which is skyrocketing in growth, which in my belief, short-term and long-term is going to be the best real estate asset class in terms of returns, in terms of making money, in terms of profiting. Okay, don't we all want that? All right, here we go. The first type are uh, the buying distressed type of traditional properties. Single family homes, most likely. There are some, small multi-units you can convert into the pad split model, co-living model. And the other ones are turnkey, rent ready. As you can see, just people who own existing single family homes anywhere else in the country for that matter. And they are willing to convert their traditional three bedroom, two bath, single family home into a co-living model, into like instead of 3-2, you did it into a 6-2 or 7-2 or 8-2 extra bedrooms to accommodate the workforce housing tenants. All right. And the last one is something that I do, something my company does is uh, purpose purpose built new construction investment model where we create one bedroom to one bathroom ratio per tenant, which we feel is the best type of a co-living model. All right, that's just my opinion. All right, okay, so let's continue. Now, a lot of people who doing fix and flip, people who doing burst strategy, right? Very common. Burst strategy is you buy, you renovate, you refinance, and you repeat. Burst strategy then been around for a very, very long time. And of course, fix and flip. So the operators who doing it full time, right? The entrepreneurs that doing this real estate investment model for many, many years. And of course, you have other landlords who like to turn their existing rental property into co-living properties, to do it yourselfer kind of deals. And, there's pros and cons associated with that. And for the, for the people who like to do the real hardcore uh, distressed kind of property, dilapidated property, vacant properties, there are tens of thousands of these kind of dilapidated properties all over the country, all the metros in all the US, and located in the urban area, right, close to downtown, in the B minus, C plus, and C or even C minus class neighborhood, right? The blue collar, the working class neighborhood, right? So you make these disrespectable offers, buy the great deals, 30, 40, 50% discount, uh, 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 and then buy cheap, get a good deal, then do the renovation. Hopefully the renovation does not exceed your budget. And then the after repair value, after 6 months or whatever, then you make a profit out of it. And then you renovate to make it a co-living model. So, you know, requires some professional expertise, if you will, right? Someone that have done it before, that have a good experience doing this traditional fix and flip model, and you happen to be want to get into the co-living model, which is nothing wrong. But these are for the experienced so-called investors because it's very risky. But yeah, those are the first two models, and the last model that that I like, that one that we are promoting, are the new construction purpose-built co-living model, rent by the room, which is the best return in my opinion. All right, so I'll go over that toward the end of our presentation. So let's continue. See, all these properties, but of course I have my personal favorite, but let's go through them. Right? This, you would think this, this rough neighborhood properties, you think they're no value. I believe there might be some value. What I mean by that is it's like another one person's trash is another's gold mine, if you will, right? I don't know. Did I say it right? Anyway, again, so we all know traditional rental, long-term rental, are, that's been existing for decades and decades and continue to do well, right? Traditional, long-term, single-family home, residential investing, you rent is an annual lease. You rent to a family that's renting your house. The typical numbers are, you buy a house, new construction or not. It does kind of doesn't matter. Like for example, 250,000, $260,000. You rent for 1,700. You put 20 to 25% down payment. At the end of the day, you get like a couple $100 monthly positive cash flow, which is fine. Just long-term investing for the next 10 to 15 years. That's how you reap the benefits of your this commitment. But nevertheless, no matter what models are you using, the three models we just share, uh, uh, ultimately you can convert your four-bedroom, two bath, 2,000 square foot traditional house, and then you add the extra bedroom. Any opportunity for you to add one, two, or three more bedrooms, so you create more rental income. That's there's a simplest way for me to describe it. The more extra room you can create and charge monthly rent per room, anywhere from $700 to $1,000, depending on the location of the property, where it is in the country, that allow you to achieve, very significant cash flow, four or five times higher than the traditional long-term rental. Okay, so here in this case, you have extra garage or extra living room space or extra den. You can convert to an extra bedroom. So you could turn a four-bedroom into a six or even seven or eight bedroom and correspondingly increase your rental income, as you can see right here. I'm not going to go over the details. You can pause the screen if you want to just go through the before and after from a traditional rental into a co-living model. You can use PassBit as a marketing platform to help you get the tenant in for you and do the rent collection, do all the record keeping. And of course, if you want to make it a real turnkey, the way I do it, the way we do it in my organization, the Year Real Estate Network, we not only we hire PassBit for the marketing platform, we hire a regular property management to do all the all the uh, management, so you can buy this kind of property wherever you're located in the country and still have a hands-off component. So the pros and cons, the pros, yes, you can increase rental income. Ultimately your co-living model becomes 8.4, 5.2, or 5.2.5, or 7.2, or 8.2. It's okay. You can earn more than traditional rent-term cash flow, more than mid-term rental investment asset class. And one would argue that this kind of co-living model can even do better than Airbnb short-term rental as well. But that's the pros. The cons associated with this kind of ratio on this renovated co-living model is such that you have three or four tenants sharing one bathroom. So three, four, five I mean, three to four to one ratio is not, to me, in my opinion, is not the best. So that's why our new construction model, 7-7 for single family home, seven bedroom for seven bathroom, or a duplex, 14-14, 14 bathroom, 14 bathrooms, so one-to-one ratio for tenant, which will command higher rent and have the tenant stay longer because they are moving into a brand new house and they don't have to share a bathroom with anyone else in that in that co-living space, if you will, right? So furthermore, the problem with today's co-living model, the renovated kind, is such that most investors are doing it the hard way. They buy older homes with heavy renovation costs, which is, a lot of risk involved. Retrofitting the floor plans, right? There's always some issues around that. Unknown maintenance issues and often require self-management. And the result, of course, higher risk, more work, and less scalability. So if those do-it-yourselfer like to do this, fine. But personally, I don't want to create a second job, right? I want time freedom. And many of my busy investors that I work with, they are very busy. They have no time to do all this work. So they rather have the new construction turnkey model, hands off, so they could focus their energy on things that are important to them, like traveling and doing other things, hobbies and activities, instead of getting a second job and with the tenants and toilet BS crap they don't want to put up with. All right, so that's my opinion. So let's move on. And then, of course, my organization, uh, at this moment, we sell brand new co-living investment properties to an investor 100%. They buy the whole thing themselves. They put 25% down payment and they get this house, right? But we're the only, in my mind, my network is the only company that offer new construction co-living model in the entire country for that matter. And there are like 30,000 co-living houses spread across all the major metros in the US, right? So the few new construction competing models that I've seen during my research so far are a little bit different. What I mean by that, okay, I'll share that with you. The little different is they built this, I'll give you some details. A lot of this purposely built new construction co-living models, those those uh, uh, those owners, they sell. They don't allow you to buy the whole the whole property. You buy fractional share. You pay the minimum of $10,000 to get a fractional ownership of their new construction model. Let me give an example of this property somewhere in Texas, where this company they built a 28 bed and 28 bath co-living development, right, from the ground up. But they don't tell you the cost. I mean, if I were doing this, I would build 28, like $1.2 million, and I'll sell it to an investor. They put 25% down payment and they get to buy this fourplex, whatever, all to themselves, 100%. I'm not gonna, make it a syndication out of it. I'm not gonna have partners, 30, 40, 50 limited partners to buy fractional shares of this new construction co-living property. No, it's not, the value is very little. And this marketing flyer by this particular company who are doing this, selling their new construction co-living model in a fractional share, they say, oh, you can get on title starting with 10 grand and own a piece of a brand new purposely built 28 bedroom asset. Yeah, it's okay. Yeah, I mean, the investors that put 10, 20, 30 grand to achieve partial ownership of this commercial building, if you will, co-living model, yeah, they get some good, decent return, but not as good as the one, our model that I'm about to share with you momentarily. All right, so that's how it is. And of course, as I do my research, you have other co-living coaching so-called gurus out there uh, who's selling a. I'm not saying anything wrong with that, right? We are a capitalistic society, and a lot of people are trying to enter the co-living space. They are inexperienced. They are rookie investors. There's a lot of things they don't know about co-living, so they may need, fee-based coaching. They may need hand-holding and all that. But myself personally, I've been doing real estate investing for several decades, right? And I have coached and mentor hundreds, if not thousands, of a mom and pop real estate investors all across the country to buy turnkey cash flow, new construction, long-term traditional rental properties all these years in different growth markets in the Sun Belt all these years. And now I'm easily, transitioning and pivoting into new construction, co-living, built rent by the room model. And so easy transition for myself and my organization and for my investors as well. All right, so let's continue. So other co-living so-called gurus, not only they selling courses, they're selling fee-based coaching. Nothing wrong with that. In the end, they help their investors, or their students, if you will, ultimately to buy a property, a renovated co-living property with an 8-bedroom, 2-bath co-living homes, or to buy fractional shares. So not the best type of investment return, in my opinion, but better than nothing, right? For those of you that have different type of skill set or lack of experience, whatever, associated with it. But at the end of the day, some other coaching program, some other co-living providers out there, those uh, promoters, YouTube promoters or whatever, they do co-living wholesale, wholesaling, I mean, borrow strategy, you buy, renovate, refinance, and repeat, traditional stuff. Or, some YouTube content creators, co-living space, they help their students to raise capital, find partners, do hard money loans, do syndication, partner with other people. To me, there's a lot of work, okay, and it's very high risk, in my opinion. So I don't have the time or the mental discipline to create a second job to do extra work. I'm busy, and my investors are busy with their regular job. Many of our mama her investors are are engineers, high tech workers from California, and medical professionals who have a good career, earning six-figure income. They have no time to create a second job to deal with this uh, tenants and toilets, if you will, right? So my builder, my turnkey partners and turnkey providers, we built new construction co-living model from the grounds up in many markets eventually, but we are starting in the Jacksonville, Florida, one of the top markets, with this kind of model, 7.7, single family home, the price point, the numbers. I'll quickly go through everything. A monthly net cash flow, like almost 2 grand, which is absolutely incredible. 5, 6 times higher than cash flow than a traditional renter. Of course, we have some builder incentives that no one else in the country has on a new build construction scenario. As you can see, amazing loan program, fixed rate, and the numbers are just absolutely incredible. All the numerical metrics just is off the chart on a historical basis, as you can see. And then, of course, we have this iconic duplex 1414 ratio, which is amazing. Cash flow is, again, off the chart, 5 grand monthly net cash flow on a 25% down payment. Just totally just unheard of, too good to be true, really. All the numbers, you can pause the screen to look at the pro forma, look at these numbers. So one more thing I want to discuss is what is the best housing markets for co-living, right? In my opinion, the best markets are in the Sun Belt, South and Southeast, in Florida, especially in Florida and in Texas, mainly in Florida. But the past split started in Atlanta, Georgia, so there are more co-living houses in Atlanta, Georgia. But Florida, the cluster have more co-living opportunities than anywhere else due to easy zoning, good zoning requirements, permitting, and the cities and counties in Florida and Texas, they are very open to this share housing methodology. They want to address the affordability crisis in their particular location. So, from a the high level, I'm very skeptical about co-living being successful as an investment model in the Midwest or the Northeast because there are a lot of reasons. Because it's a cheap market, it's a low cost market. It's kind of hard to make the numbers work in the Midwest and Northeast, as well as in the Western region and in the Pacific Northwest because cost of single family home is so expensive. Like $500,000 to $1 million for a single family home bungalow. How can you make it work? The numbers just does not work in the Western region, Denver, Phoenix, Las Vegas, California, Washington State. It just the numbers just does not work unless you own existing property free and clear or have a very low debt in the Western region. So because you have very low debt, very low monthly obligations, you could potentially make it happen. You can convert your traditional single family home into a co-living model in those neck of the woods. But if you are buying uh, a regular house to convert to a renovated co-living model in the Western region, you're gonna be you're gonna be have to think twice, right? Because the numbers does not no, does not work. The purchase price is too high. The median price of homes in the Western region of the U.S. is too high relative to the rent. You can collect even multiple rent coming from the co-living model. I do not believe that's profitable. So even though I say you can theoretically do co-living model anywhere in the country, but I have to believe that only a select few markets you can really make it work. You can achieve profitability, which is in Florida and Texas. Currently, this is my humble opinion. As you can see, there are many submarkets in Florida where this co-living model really works. And our builder, our partners, our turnkey providers are doing scaling with new construction, single family home and duplex. Starting right now in Jacksonville, Florida, we're gonna go enter into other markets later this year, early next year. So our investors are following our new construction model. As you can see, Jacksonville have all the great numbers, great everything. All right. So this is a past split high level scenarios. Just go to show you how lucrative it is the co-living space in the state of Florida. All right, so that's all I have to say right now. So the recap is there are three strategies. You buy a stress asset, uh, buy a good deal, with very deep discount, and do your own renovations and all that, and just make it into a co-living model. Very risky. It requires a lot of skill set, a lot of experience, and even then, the risk is extremely high. Or traditional landlord, you can convert your existing single family home, uh, do some cosmetic fix up, add some rooms, pay whatever cost it is, then turn it into a 8 bedroom from a 3-2 to a 8-3 or 8-2, which is not still not ideal because for the reasons I just stated to you. But in my opinion, the best model is using our new construction, grounds up investment model 7-7, right? 7 bedroom and 7 bathroom, single family home, or duplex 14-14, which is like amazing and the returns are much higher. All right, so that's all I have to say. That's my recap. Thank you so much. And whatever you choose, whatever three strategies you choose, is based on your buy box, is based on your unique skill set, the time you have available, your experience level, and all that. So everybody have their own ways of doing things. But I just want to share with you from the global perspective that the co-living investment model is up and coming, is an emerging real estate asset class. It's going to blow away all the real estate asset class out of the water, regardless of which strategy you're going to use, right? But that's my humble opinion, having been doing this for so long in an investing game. All right, so with that in mind, if you see a lot of value from this video presentation, please like and subscribe to my channel. And also, if you have not already done so, put your email into my website below on the description, and put your email into our database so you can become a free member of our real estate investing community of like-minded individuals or several thousand members within our organization. So every a few times per each week, you will receive free real estate investing contents straight into your email inbox. So you can continue to get educated and learn and everything else. And the remaining motivated one, uh, uh, you feel that our turnkey new construction model resonates with you, you think you qualify, you're motivated, please contact me directly so we can talk. Thank you so much. This is SeeWing Yee from the University Network. Have a nice day. Bye-bye.